Okay, hi everybody. Welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. I'm just hopping back on here to do another weekly update for you. Today is June 27th, 2026. And so we're going to get into this real quick. I'm just going to recap really the price action that occurred inside of the S&P 500 this past week, and then give you an update on my position as well. Again, I'll just reiterate that I don't use fundamentals. I don't use technicals. I don't look at macro data. I don't watch news headlines. I don't pick stocks. So I have a pretty unique approach here that I use and that we teach you how to use at True Alpha Trading. This is our True Alpha Trading system. It's a risk management system, and it's totally based on positioning yourself around price extremes on the major indexes. And so the portfolio that I have here pulled up on my screen is my actual portfolio. And week to week, I show you the results of each week based on the price action that we get inside of the S&P 500 here. So I don't have other positions layered in here. I don't have other individual stocks. I'm entirely positioned against the S&P 500 here. So this is really, you could really look at this system as an alternative to, say, just passively being invested in an index fund. And that's really what this is designed for, is just to still track any of the major indexes, but just to be a little bit more dynamic than passively investing against an index. And so hopefully these updates are helpful, at least for you to be able to watch over my shoulder and see how I'm positioning myself and managing risk and implementing this system. So again, I position myself and then I'll manage my risk around price extremes. And one thing that I think is important that we teach you is just to start with a vision of what you want your risk and reward to look like, right? Because you can try to predict the future and predict where price is going to go, but ultimately what's going to drive your P&L week to week, month to month, year to year is going to be the result of where price actually moves. And so I start with a vision in my mind of what I want my risk and reward profile to look like. And then I paint that picture by by using this system to choose my positioning around the price of the index. And then I'll manage my risk to achieve and optimize that distribution of risk and reward based on the price action inside of the index. But there's nothing really speculative in here that I'm doing. So I'm not trying to speculate. I'm not trying to predict where price is going to go. I'm simply visioning a relationship between risk and reward, and then I'm positioning myself so that my position from the onset each month captures that distribution of risk and reward. And then week to week, based on whatever price action we get inside of the index, I'll react to the price action and I'll just look to improve upon that distribution of risk and reward, day to day or week to week or month to month. And so it's really a unique approach, a different way of approaching trading as a means to long-term investing. And nobody does this. You won't find somebody else teaching you how to trade or invest in this way. And so, that's what I love about this system. It is a unique approach. It is different from what a lot of people are doing. And it's my main strategy that I use now. And I've been very pleased with it. So let's get into this. What you have on the screen here is, again, I'll just kind of zoom in here for you. This candle here represents where we closed Friday before last Friday. So you'll notice the arrow or the yellow line here is kind of marked right in the middle of that candle. And that's because Monday of this past week, or I'm sorry, Friday of the week prior to last week was June 19th. So it was a holiday and your equity markets were closed, banks were closed, and recognizing Juneteenth. So So Friday was actually closed, but the futures market continued to trade for half a day. And so where I updated you was where the futures closed after half a day's trade on that Friday, and we closed right here at this 775.56.25 on the S&P futures. Well, when Monday opened, the candle here is going to be combined for Monday as well because it was a federal holiday. So I'm still marking the close of Friday prior to last week on my candle here just to really truly capture a weekly move over the course of this past week. But that's why that looks a little bit wonky. But nevertheless, from where we closed Friday before last week to where we closed yesterday on the S&P futures, that move over the course of a week was about a 2.10% move lower for the week. And so we have seen just a continuation of this kind of slide inside of the S&P 500, and there was some pretty gnarly volatility this week, as there was, as we've seen really this month, but we still haven't seen that just full on break or explosion in volatility to really push us lower inside of the indexes here. We've seen a lot of sector rotation or like Micron had earnings this week, which really kind of kept the market afloat, kind of held things together. And so we haven't really seen that major unwind yet, with volatility really exploding and the market really selling off. So we haven't seen everything correlating inside of here to really drive things significantly lower, but we are seeing some signs of volatility. Just based on the month-to-date move here, I'll just go ahead and acknowledge that. This candle here represents where we closed back at the end of May. So from where we closed at the end of May to where we are now, you're looking at a move lower on a month-to-date basis of about 2.55% for the month of June so far. And again, if you just notice here, the volatility that we've had this month, there are some signs of increased volatility here. So we'll see if this continues into next month. We still have a couple trading days to go for the month of June. So we are on the verge here where things could really explode. And so we'll see kind of what next week holds for the month of June as we kind of close out this month. Now, if I zoom out here, I'll just show you real quick where we are on a year-to-date basis. So from this candle here represents where we closed at the end of last year to where we are after this Friday's close. You're looking at a year-to-date move of about 7.3% higher on the S&P 500 here for the year. And so, we are sitting still at a decent return for 6 months on a year-to-date basis here. So we'll just again kind of see where this goes next week, and I'm going to be looking to reposition myself for the month of July. And so I'll update you next week on what that looks like, as well as update you on kind of how we finish out for the month of June. But let's go over now and let me show you, just give you an update on my position inside of my account. So if you look inside of here, what you'll see is, and what I've talked about the past couple of weeks, are some of the adjustments that I've made in here. And you'll notice that my adjustments look different now. And that's because what I did this past week is I had more adjustments on in here. And as I said I would try to do, is if we did get a continued, if we did get some kind of a snapback, which we got on Tuesday, what I said was that I would probably use a move like that to consolidate some of the adjustments that I had made to go ahead and take some profits and use that profit to close in the gap that was indicated over here in this column here, which represents whether or not I'm outperforming the S&P 500, or if the S&P 500 is outperforming me. And so I was able to do exactly what I told you I would look to do, which was to close this gap in this column, which I did by just taking some of those profits that I had inside of the adjustments I had made and closing that gap. Well, after after we saw, just kind of that rally back inside of the S&P, we sold off pretty heavily. And so what I actually did which was Thursday night, I made this adjustment to my position. And if you're watching the market, then you know that Friday, not too long after we opened on Friday morning, the S&P 500 had rallied all the way back from a big sell off that it had overnight. Well, I went ahead and took the profits on that adjustment to go ahead and improve my overall distribution of risk and reward that you see over here in this column. Now, again, the main thing that I just want to point out is that I'm not making these adjustments or making these trades and trying to speculate on what the price is going to do. Every single adjustment that I've made has really been reacting to the distribution that's right here in this column. So, I'm placing a trade that improves this distribution of risk and reward to my overall position, so that if I just have to hold that for the rest of the month, then I'm good with how that positions me. But if we do get, a big rally or a big sell off, and it puts me in a position where I can just further optimize this distribution of risk and reward, then I'll look to do so, right? Because it just puts me in a position now, kind of like we sit for the rest of the month here. Like I said, we still have 2 trading days left, and we're sitting on the verge of what could be an explosion in volatility. And with some of the volatility that we've seen here recently, I wouldn't be surprised if we saw that on Monday or Tuesday for the last couple trading days of the month here. And so where we're sitting is right about at 73.97.25. So we're right in here on the S&P 500 on the futures in this case. And so you'll see, I mean, we're right on the brink where if we really break down by another, if we saw, say, a 3% sell off, followed by another 3% sell off, I mean, you're talking about, a pretty significant move lower here, where I've got my hedges starting to really kick in and help my position here. So I'll just kind of zoom out now to show you that really kind of how I've been able to optimize this. I know you can't really see here the numbers, but the thing that I would tell you to pay attention to is just look at how deep this goes in terms of how I've positioned myself to outperform the S&P 500 if we do see this, just some kind of a major sell-off to some significant degree here inside of the index. Okay, well, that's great, and I'm pleased now that, where if we do see some kind of eruption in volatility, I've got a hedge that should be kicking in for me and working for me and helping my position here. But as I also state from week to week, what I don't want to do by taking on any kind of a hedge is just totally destroy or limit myself to the upside. And you'll see with the adjustments that I've made, what I've been able to do is optimize my position here so that if we do get some kind of a significant rally higher off of where we are now, then I'm going to maintain a market return to the upside. Yet if we do see a continuation of this move lower inside of the S&P 500, then I do have a hedge that kicks in that really starts to help my position here. And again, in and of itself, I'm also not just looking at a 1 month position here. I'm looking to position myself like this and manage my risk like this month over month over month. And so what I'd ask you to think about is just, if you compound the structure here of risk and reward to this position, just think about how much better long-term your overall results could be if you're able to maintain a market return to the upside month to month to month. But when we do have significant sell-offs, that you're able to hedge off some of that move to the downside. Okay, that takes a index type of return and just makes it that much better, in my opinion. So again, I'm very pleased with just kind of where we sit at this point in time. We'll see if we do get this kind of a continued move lower inside of the S&P 500 in the coming week. Again, we've only got 2 more trading days for the month of June in next week, and then I'll be looking to position myself for July, which will look, I'm sure, very similar to what we did for the month of June. And so I'll update you on that, as well as, we'll look at the results and kind of how this month actually shook out with that update as well. So that's an update on my position here. And again, I hope this is helpful for you to just kind of watch over my shoulder, see kind of not only hear how I'm envisioning my position, but how I'm actually positioning myself so that it captures the distribution of risk and reward that I want for my position, but then also how I'm looking to manage risk inside of here, which again is not anything speculative. I'm just reacting to price extremes on the index. And so where I can make an adjustment that actually optimizes the distribution of risk and reward that I want, then I'll look to take it, and again, that's just a unique way of managing risk, but it's also a way that for me, it takes the emotion out of it. It becomes very simple, right? Less speculative, because I'm not just looking to make some adjustment and hope that it works in my favor without any kind of awareness of how it might impact my overall position and portfolio return if I'm wrong, right? Any adjustment that I make or management of the position here, I know how it's going to optimize my return to the upside, but I also know how it's going to affect my potential risk to the downside if I'm wrong. And so, again, I just think that's a unique and simpler way of managing risk and quantifying risk. And so hopefully this is helpful. If this is a course, if this type of position interests you, we have a full course that teaches you exactly how to do this, along with the automated tools that sync with your Schwab account and start tying in all the market data and helping you calculate a lot of this automatically so that you can focus more on positioning yourself and managing risk without having to worry about all the technical calculations. But what our tool here helps you do is to give you a visualization of what your distribution of risk and reward looks like, again, so that you can keep that completely in front of you, and then you can manage your risk by making adjustments over here in these columns like you've seen me do. And so it's just a great tool here to help you implement this system and visualize your position and risk management. So that's going to conclude this update. With that, I hope you have a wonderful rest of your weekend, and we'll look to catch you here next week at True Alpha Trading. Thanks again. See you soon. Bye-bye.